Hey everyone, this is Steve Kick, your host of the MMLA Connect Podcast. And today I have a smiling face with me, Dan Sugg, CMB, Chief Mortgage Lending Officer at Michigan First Credit Union. Dan, how are you today?
Doing great, Steve. I've heard about this podcast and I couldn't wait to get on and talk to you.
I know, I appreciate your patience. Dealing with the host can sometimes be a little bit difficult when you're trying to schedule things. So appreciate the patience and glad to have you on.
Appreciate it. Glad to be here.
Dan, you have CMB in the title. Let's hit on that for a second here and give you your flowers. I've had a few CMBs on the show, but can you touch on, getting that accreditation and why you went there?
Yeah, certified mortgage banker. So, I've had it now since 2009. And I think the original motivation for me was to set myself apart from everyone else and really take that road. I had seen and been mentored by a few people that had their CMB. One was actually a master CMB, which is both residential and commercial. And I felt that everybody listened a little differently when a CMB was talking. And I wanted to understand what that was all about. And given some changes in my career at the time, I had some extra time to do it and decided to take the leap. And at the time, there was only 700 active CMBs and about 270,000 people in the mortgage industry. So if you think about that ratio, 700 to 270,000, I'm like, wow, this is pretty special. And it's still kind of that ratio today. I think there's about 1,000 active CMBs today, which is pretty cool. And it's a very engaged society. I don't want to say it's got a secret handshake, but it kind of does have a secret handshake when you meet another CMB. You don't need to know them. You already know what they're about.
Yeah. Perfect. That will lead us into, us peeling back about 30 years, right? Was it 96? Yeah. I think I saw.
Yeah.
Is correct. When you started in the mortgage industry. Tell us.
That's right. Yeah. Well, if you kind of reel back to my working days, everybody leaves whatever it is and gets the real first adult job. I started in manufacturing, and I had a relative. My brother was actually in the mortgage business and at GMAC Mortgage at the time and was one of the first people hired to run GMAC Mortgage. So I was very familiar kind of with the mortgage game, but I was in manufacturing and hated every day of it, and there was Christmas time. The company that I was working for actually dissolved to some degree. And for lack of a better word, I was fired. I was let go 3 days before Christmas. I had just built a home. I had 3 babies under 4, and wife didn't work outside the home. And I said, man, what am I going to do? And my testament to my wife, Donna, she said, Dan, you tell me how much you hate your job every day. Go do something different. So, man, I marched right into GMAC Mortgage. I didn't tell my brother because he was in leadership then. And I went to the last person that just did my mortgage, who drove a nice car and looked like he was doing really well. And I said, hey, I want to be a loan officer. He's like, really? I was like, yeah. He's like, okay. You're hired. Basically, that's how it worked. They give you a box of cards and he goes, your territory is downriver. Nobody wanted it. He's like, downriver, go have at it. And I think if I remember correctly, I think the jumbo limit was like $191,000 back then, So the average loan amount was like $40,000. And I was committed. I started in January and, my goal by June was to close $1 million a month. And back then, $1 million a month puts you like on the top of the list. And I remember specifically the sales manager at the time wrote right on there, hey, good luck, lofty goals. And I did it. I don't know how, just good old fashioned hard work. And man, I realized that this is the best job in the industry. This is the best job in the world, quite honestly. I had been at a place where I could punch a clock and do all those things. So that's how I cut my teeth. I got in as a loan officer. Had no business, a box of cards, a $500 draw, and 52 basis point commission. And I had to get $500 at first pay, and I had to pay it back the second pay. That's how it worked, right out of the gate. Luckily, I was only negative 1 month, and the second month I actually closed more loans and paid the commission, and rates were 8%. And quite honestly, that was probably the best way for me to learn. Fast forward about 11 years and grew up through the ranks at GMAC, district or assistant district manager, and got an opportunity to go work for LaSalle Bank and become a regional. And from the day that I got into that position, I always wanted to get to the next level. I'm not sure why. It seemed to me that was like a validation that I was being successful. And quite frankly, that's how the mortgage industry has grown for years and years and years, is they take their top people and kind of move them into the next position, And I think that's starting to change a little bit now with the advent of technology. But so I ended up at LaSalle and ended up running the state of most of the state of Michigan for LaSalle. I worked for a familiar name, Eric Burgun. Eric was my boss for a number of years there. And pretty quickly after we turned that into an actual powerhouse at LaSalle, Bank of America came along and bought us. And I don't really have to tell you that was in 2007 and what kind of happened after that. But basically, we all took reorganized roles with Bank of America and through the financial crisis and stayed there. And then, at the end of that, it was pretty evident to me that the growth pattern at Bank of America was not going to really serve me. So I was there about almost 5 years and went to work for another bank, a regional bank here in Michigan, ran the state for them, and realized that banks in general in 2010 or 11 weren't looking to grow mortgage. And the biggest growth pattern was independent mortgage banks. And that's where I kind of really cut my teeth. So I took a leap of faith and I went to a one-office retail organization owned by a great family, the Walker family out of Port Huron, Michigan, and helped them grow their retail channel across the United States. I had zero experience to do it. They took a leap of faith in me. And I literally would get on a plane and I would fly into a market. I would check into a Courtyard hotel and I would start calling lenders to see if they wanted an open office for first preferred mortgage. And I made the next 8 years of my career at 3 different companies, growing networks nationally. Honestly, I had no blueprint for that. It was just reputation, hard work, and a lot of handshakes. And we, opening offices in 29 states over that 8 years and meeting hundreds and thousands of people in this industry has helped me to this day. And I realized it was just bigger than just Michigan and could really start to grow on a national level. Worked all the way up to Gold Star, president of Gold Star, and realized that while I said I wanted to be president of a mortgage company, ultimately it didn't serve me well. And quite honestly, I probably wasn't well fit for the role. Being responsible for every aspect of a privately held company just wasn't as much joy and fulfilling to me. And quite honestly, we had a difference of opinion. So I left there and took a job in Philadelphia and started to grow a small company there, and then looked for another opportunity to come back to what I felt was my best core business, was running a division of or a region of a regional bank or financial institution. And that's where I found this opportunity almost 10 years ago now in Michigan at Michigan First Mortgage. And that allowed me to start almost from scratch, kind of with a little starter seed of a company, but what we see today, which is Michigan First Mortgage, a division of Michigan First Credit Union, servicing over $1 billion in loans that we've originated here, and a team of almost 80 people starting from 4. So that's kind of where we're at today and what I'm doing today. Again, responsible, reporting to the CEO of the credit union for everything mortgage, servicing, operations, sales, and secondary in my day job.
Well, you've obviously, had a lot of experience in a lot of different roles in the industry. Tell us, anyone who's maybe thinking about coming into the industry or thinking about maybe going into more of an advisory role. What are what's the best advice you would give to someone, coming up in the mortgage industry?
Well, that's a nice softball question, Steve, because the first piece of advice that my brother gave me when I got into the industry, besides telling me to find my niche and do that well and then expand on that, which was a very good piece of advice, he also told me network within your associations. And at the time, it was Michigan Mortgage Lenders Association. Actually went by a different name, but Bankers Association. But at the time, Joanne had just been installed as our executive director in the mid to late 90s. And I got involved, and I just literally went to an event, and probably a Christmas party was the first one, or maybe the installation banquet, and then decided to get involved in that. And Joanne and a gentleman by the name of Dan Calcaterra at the time from Town Mortgage sat me down at some point and said, would you be interested in getting on a committee and maybe even jumping into the chairs? And I had started in the mortgage industry in my mid 30s. So, early 30s. And it was, I think, evident that the mortgage industry was, believe it or not, aging, and we weren't bringing a lot of young people in. So being in that case, I think, lended me to jump right into the chairs at MBA. So that's what I did. Quite honestly, I attribute, and I think I said this recently in the James T. Barnes Award Memorial presentation, that I owe a lot of my career success to the MMLA. The people that you surround yourself with that protect your reputation because they know you and understand you, and even when you're not there is important in this, and goes a long way. I can't tell you how many times I've walked through a door, they say, yeah, we already know who you are, and it's not because of things I've done, it's because of people I've interacted with that have shared opinions. And that's been, a piece of advice that I've given new hires all the time. If you look at the roster of the MMLA today, I think all of our team members, even our servicing team members, are listed as members of the MMLA because I push them to that, along with the MBA too, and encourage them to get involved and to network and to provide value to the industry, and always try to take as much out as you put in. Certainly the association needs volunteers, but they also give a lot of value to their members too.
You brought up a few good points there, and some good segues for us, but networking, I don't think I really understood the power of networking until I really started getting involved with the MMLA. I had always kind of done different networking events. And I think a lot of people out there who might be in the lending game are like, why would I network with other loan officers or lenders, right? I mean, why would I spend my time? And the more that I've gotten involved at MMLA and just giving back and genuinely learning about other companies and other lending institutions, you get so much more back, right? I mean, you have not just the connections, there's business that goes back and forth, things that we can't do that other people can do, and vice versa. Why do you think that the networking piece is such a game changer? Because you said like the advice was networking and you got involved in the associations. Why do you think that was such a game changer for you?
It gives you a different lens on what we do. It allows you to see it through somebody else's perspective. So much of what we do is siloed, right in front of us. Privacy laws don't allow us to share information and things like that. But when you start thinking about organically growing your business and starting to emulate other people and use their strengths to your benefit and then advocate on their behalf too. I tell stories all the time when I was producing and involved in the MMLA that, I would run up against realtors that say, oh, well, I use Steve Kick over at LMCU. And I honestly would say, that's a great loan officer. And I would validate them if I knew them. And I wouldn't tear them down. I would build them up because I would want you to do the same for me in those scenarios. And I think that when you start thinking at that level and building those networks, that you don't have to worry about what people say behind your back because you already know they're great people you're with. And people surround themselves with people that are like-minded. And certainly I think if you do that, you're stronger internally than you would be externally by ignoring them.
As long as that mind is of sound, right?
Well, when it's not, it's quickly discovered. So when you do network and you're next to somebody you feel doesn't share those opinions, you quickly know. That's the whole point of networking,
The energy is thrown off.
Yeah. And nobody wants to be next to somebody that just sucks the energy out of the room. So ultimately you start to get in a scenario that the people that do show up are those people that share that vision. You get a lot more by giving than you do taking. And that's been in any walk of life. There are many opportunities in our industry to give more than you ever take. And if you do that, it definitely comes back. I see it all the time. So if all you do is take, you're not going to be in this business long.
Yeah.
I tell people all the time that, first of all, working in the mortgage industry takes a servant heart. It just does, because if all you're going to do is refis, you're only going to be in this business for a few years. And if you work with people that have bad credit, and you work with people that have challenges and illnesses and stories to tell and children, all of those things, you have to be able to have empathy and work with them. And if you work if you take, I think why I resonate with the credit union industry so well, especially the credit union mortgage industry, because they have a spot in their mission statement that says we serve those people. And it's not that other companies don't, but it's literally why we're formed, is to serve one another. And if you think about how that lines up with kind of that home ownership dream, the real part of this, the place that not a ton of people talk about, but putting grandmas into the house for the first time, and so their grandkids can break the renter cycle and build generational wealth. And those stories that I get to see, that get to cross my desk today, and I have for years, really sets our specifically credit union mortgage industry apart from the rest. There are some really good mortgage companies, independent mortgage banks and regional bank lenders that do that same thing in micro doses. Our entire industry of credit union mortgage is built on. And I tell loan officers all the time that, working for a credit union, especially a credit union mortgage company, is kind of like going to church. It's not religious in any way. But if you don't believe, you can't belong. And it doesn't mean that we're bad or you're bad or, we're better. It doesn't mean any of that. It just means you have to share that belief to be successful here. And that's our first filter. It's not how many loans did you close. It's not how much money can you make us. We don't answer those questions every morning. We get up and go, how do we serve our members today? And how do we do it in a way that's good for them? And then we try to make money at that. That's the third or fourth bullet point.
Yeah. And, the credit unions, I work for Lake Michigan Credit Union. And I've been there for 16 years, and credit unions really didn't have a huge role in the industry. They've kind of come up through the ranks, if you will. I would say more so in the last decade that we've really started, doing a lot more volume as credit unions as a whole. Do you think it's solely because of the way that credit unions are set up that it makes it easier to do mortgages and to, serve people in that respect? I mean, for the most part, credit unions seem to have lower rates on what they loan out and higher rates on savings and whatnot, benefiting their members. So, it's a win-win in almost every scenario, right? We can also offer products that some banks can't offer. Can you touch on that a little bit of how credit unions are maybe changing the game altogether?
Yeah. And they weren't big mortgage lenders pre, I don't know, pick any year, 1995. I mean, when I interviewed for this job, I had never heard the name Michigan First Credit Union, and it had been around for 10 years in that name before I was even left the state. Previous to that, it was Detroit Teachers Credit Union. Primarily, credit unions remained small. There weren't these mega credit unions like we see today. LMCU is a very large credit union, obviously number 4 or so lender in the nation. So what the advent of credit unions merging and getting together allowed their balance sheets to grow and then support the lending that they were doing. So you would see them do mortgages either through a QSO or through an association with another institution where they would just refer the loan out. But for those balance sheet products, they had very limited lending capability. So you've seen credit unions first grow in assets, number one. And then number two, you saw a mentality around risk where they were willing to sell that asset off and still service the loan. So getting your Fannie and Freddie and Ginnie approval was important for credit unions to start to grow. So you've seen the advent of them start to lend on a scale of what you would have maybe seen a regional bank do before. I think credit unions still only make up about 7% of the mortgage business today, depending on how you categorize the lending. But I heard a stat when I was at a credit union risk conference this past summer, where if you added all of the, and I may get this a little bit wrong, but if you added all of the balance sheet capability up, all of the assets for all of the credit unions in the United States, it would be only 30% of JP Morgan's balance sheet. It kind of puts it in perspective when you think about it. Like we are a decimal point on JP Morgan's balance sheet from an asset perspective. But it's growing and it's getting bigger, and certainly that is getting to evolve in that piece. But credit unions certainly, I think, are becoming even more relevant. And yes, if we continue on the path of acting like that servant heart, doing the loans that other people won't do, you will see us continue to grow. But probably not as fast as some of the other areas of the financial.
And the thing about doing those loans that other people won't do is the more you start doing those, the easier they get, right? Or the more you realize what ones you can do and can't do, and just become better at that. So I do find that interesting that, as credit unions start to grow and start to do more volume, they're going to get better at what they do, and that's just natural. So I do see the space continuing, for credit unions continuing to go up in the mortgage lending area.
And you're continuing to see mergers and acquisitions happen in our space. I think when I started, there was 5,200 credit unions 9 years or 10, almost 10 years ago, and numbers in the 2,800 range now. It every year, a portion of them come together and merge and serve their members a little bit differently. Yeah. It's not the only answer because we don't have enough assets to lend to everyone. It takes all kinds of business to serve the mortgage industry. But in the areas that we serve, I'm sure LMCU, I'm very familiar with your team and the construction lending you do there. We do a lot of LMI business here. I get calls from Fannie and Freddie all the time saying, how do you do so many low to moderate income loans? And I'm like, well, we just work with our members. We're in the city of Detroit and we're in downtown Grand Rapids. That's what we do, is that lending. We're known for it.
Yeah, for sure. Now, you've been involved in the MMLA. We touched on it a little bit here and a little bit there, but you received the James T. Barnes Award a few years back. And, I think you've been able to introduce a few of the winners since then. Can you tell us about again, why you've come back to the MMLA and you've had your team so involved, and, also about, how you earned that award and continue to keep coming back even after you've, been so involved?
Yeah, that one, quite honestly, I don't want to say it was a shock, but it was a surprise to me. I was very familiar with past winners of it, and I never really thought to myself, one, that I was old enough to get it. I don't know if there was an age limit. Whenever you hear Memorial Award, you're like, whoa, lifetime achievement. Like, maybe I'm done. But I was flabbergasted, to be quite honest. And it was with great honor. And the banquet we had up in Frankenmuth was just one of the high points of my career, certainly. I think we touched on the value of MMLA today. Probably the last 10 years or so, I've been very intentional about the time that I give not only to the MMLA, but to the MBA also. The Residential Board of Governors really sets the policy direction for the MBA, so we basically tell them, hey, this is what we want you to work on for the industry. And it's made up of, 49 different members from across every section of the mortgage business. And I felt it was important. One of my achievements of my career was to get onto ResBog. And I think the James T. Barnes is just a reflection of putting that work in to get to there, and showing up, and certainly buying a few beers along the way, and being in the bar and rubbing elbows with everyone and realizing that you're willing to give back and do the heavy lifting for our industry without regard for your time or your money, to be honest, because MMLA doesn't pay people to come there. It is an investment in time and money and energy. And I believe it probably is a culmination of that. And I didn't solely earn that. There was a lot of team members that helped with that along the way. But I think it's important that we support that organization. It does truly the work that most companies don't have staffs to do. Advocacy, reputationally, and then ultimately education, and driving that along is super important. Saying I won the James T. Barnes is still kind of even weird today when you look at the names of the people that won it along the years. And I knew most of the recent winners the last 25 or 30 years, and consider them friends. And certainly Terry Aiken was the one to get it this past year, and is a very dear friend of mine. And I was just as honored. I couldn't make the ceremony. I was actually not in town, but I made a nice video tribute for him. So yeah, it was not on my bingo card, as the kids say, but it certainly is something that's displayed proudly on my desk, and my entire family came up for it, and it was a lot of fun.
Yeah. And, the MMLA is given back to you in so many ways, the MBA. So now you're involved with the MBA as well, right? Yeah. What are you doing for the MBA this year?
Yeah. So if you would have asked me, and this is one I will admit to, if you would have asked me 10 years ago, hey, what would be the pinnacle of your career? I said, I would want to be one, a representative on the residential board of governors. And like I said, that's essentially a 39 member voted in member board that sets the policy direction for the residential side of our mortgage business. There's a ComBog, which is the commercial board of governors, and then a ResBog, and two bodies they push up to the what's called the board of directors. So I was very active in advocating to be on that committee for a few years, and I'd almost given up hope. And I got a call, I think it was in late 22, that said that I had been nominated to be on the board and that it had to go to vote. And I actually won and got on ResBog in 2023. The surprising part is getting instilled in the board of governors is pretty cool. Being in the meetings and having a voice is pretty cool. I was on my third meeting, ResBog, and we were at the chairman's conference for MBA in California, and I got the little kind of one of these to come over, and I thought, I've screwed something up. They're gonna throw me out. They figured me out, but I got nominated to get into leadership. So I became a vice chair of ResBog, and I'm serving currently as chairman of ResBog. So, guiding that team of very privileged, very smart, very senior mortgage executives of 39 member companies and 7 committee chairs that report to me and drive the direction of the MBA has been eye-opening. And quite honestly, now, if you line it up from my career, really, I think maybe the pinnacle of my career. So I'm in the heat of that right now. I'm in the middle of my chairmanship, and we'll go to October of this year. There isn't something I don't do every day that's ResBog related, either making a phone call or talking to people about advocacy or planning with the staff at MBA about our next meeting and driving. And, things like AI, things like single bureau credit score are attributed to me and the leadership team this year at pushing that forward. And when you're in it, I know from the outside looking in, it's like those are just bullet points on a piece of paper. But when you're in it, you realize the importance these committees play in really pushing our industry forward, a collective forward, not just benefiting credit unions and not just benefiting IMBs or benefiting banks. It's or title companies or MI companies. You can name right down the thing. It's collectively moving forward our voice in our industry. So whenever you see Bob Brookschmidt, make a statement or testify to Congress, or one of our lobbying people looking in front of a state committee, it's because our boards have done the work to put them there. And that's a pretty cool thing when you think about it. The other caveat of that is being in leadership of ResBog gives you a seat on the board of directors, which the two boards feed up to the main board of directors, and they essentially advocate to the MBA on how the MBA should be ran. So that's been a very unique view. That wasn't awarded to me. It was awarded to the seat that I occupy, but it has been a very unique view for me and very humbling to be at that level. Be one of really 12 people sitting on a board running the MBA is kind of cool.
That is pretty cool. And it's not come without a lot of hard work, though. Obviously, as you can see, you've done a lot of things. You've been involved in a lot of things, committees, associations, different companies. So that leadership and that dynamic, the amount of knowledge that you have for this industry is you have a very large depth of knowledge. And so having someone like you as our chair for ResBog is super important. And we're super thankful that you are doing that and advocating. And you touched on a few things that are important right now with ResBog. Can you go a little bit deeper? I think you said credit scores, single score credit scores, and then also AI.
Yeah. So as we know, credit costs have increased dramatically over the last 4 years. And I'm not here to say whether a tri-merged or a bi-merged or a single score is the best indicator of risk. There are much smarter people in data governance that can tell you what the risk of those are. But it was evident to us as a ResBog committee that credit scoring model that we have today was not conducive to any sort of free market. Fannie and Freddie, where about 85% of the loans get sold in the secondary market today, govern and set the policy that you have to have a tri-merged credit report. So whenever you are required to give 3 scores to your investor and you go to a secondary market that there are only 3 people that produce those scores, they pretty much can charge whatever they want. Again, I'm not here to argue the moral issue of that. I can tell you that's called, and I learned a new term last year, that's an oligopoly. That is 3 people that supply the exact thing that you need, and you can't sell a loan without it. Unfortunately, though, we've seen those credit costs go up as much as 400% over the last 4 years. Now, cumulatively, you could say, one score is, I'm just going to use round numbers. Let's say one score is $30, 3 costs 100. You're only saving somebody $70 if you go on 3. But unfortunately, the industry average from pulling a credit report to a closed loan is about 30%. So you pre-approve a bunch of people that don't close, they don't get qualified. You're spending all of that credit. So a lot of that expense is borne by the company or the financial institution. Just my little organization, was a considerable number, close to 7-figure number of credit expense and not getting reimbursed on that. So, you can say, well, but that's a company expense. Why would anybody care if we roll our costs? Because those costs end up ultimately in my margin. I have to pay for them somewhere. It's not like we're earning money. So the consumer does eventually pay for it. They just pay for it in higher rates and fees. So long story short, the ResBog took up this issue and had 6 or 7 months of really good discussion. Started last ResBog term and really went through the summer. Until August, we voted on pushing a policy narrative forward with the MBA that we would suggest that anything above 700 credit only get 1 score. So if you pull 1 credit report and you get a 700, then you just stop. You don't add any anymore, and you can deliver a loan to Fannie Freddie. That's our recommendation. And we have now issued that to FHFA, a letter to Executive Pulte, and then we've now signed on with 4 other trade groups, including American Credit Union, independent community banks, and the builders now that support that mission and recommendations. So we have trade support now, and certainly working with Fannie and Freddie and exploring that possibility. This isn't something probably that's going to happen overnight, but I do believe that it is getting some traction now. And for me, if I look at it from my personal opinion, I look at it as an opportunity to have a much larger conversation around risk. You can go buy a $1.3 million boat and you can finance it at LMCU or at Michigan First. We do boat loans, and we're going to pull 1 score. I buy a $160,000 house, I got to have 3 scores, and that boat floats and can go anywhere. That house isn't going anywhere, So I think it's a valid conversation around risk, certainly. And there's a lot of data that I've been privy to that certainly backs up that claim that at a certain level, the credit score degradation between the 3 scores really doesn't change a lot. And then the last point I'll make on that, because I don't want to spend a lot of time on single score, but the argument for a 620, a 700, and a 780 score, let's say, if I pull a 700, they could have a 620 because they have some bad data. That's true. We haven't seen that level of degradation difference between the scores. If you force somehow the credit bureaus to all get the same data and they all run the same FICO model, they would all get the same score. And I think that's the part you need to attract, is that we're paying really good money for incomplete data and it's giving us bad scores today. And we level that out by saying, let's just get all 3. If we level 3 bad scores, the middle one should be good. Well, that's ridiculous. Like, make them do their job, go out and get the credit data, and then give us a complete report, and we should be able to move forward. So love to see where that goes. That's one. And then AI is another one. So ChatGPT came out.
Everyone's talking about AI, Dan, so we got to talk about it.
ChatGPT came out 3 years ago. SAFE Act was written 9. So, regulation, number one, has not caught up to AI in the lending industry. And if you think about the pace at which AI is coming at us, I was just speaking at a MISMO conference in Florida. I did a panel on AI innovation. We're at the crossroads of regulation. And the person interviewing us owns a company, an AI company, a startup. And he said, now this is one of the smartest people I've met. He said, nobody knows where AI will be in 3 months. Think about that. Nobody knows. It's developing on the day, and almost like a organism just doubling itself every day and what it can do. AI was not on the ResBug agenda before this term, and I felt it super important. It was one of mine that I elevated because I believe as an industry, we need to define where AI gets used and touches the consumer or our member in this case. And if you think about, where we stand today, there are companies out there that have loan originators signing 1003s to the tune of 300 or 400 apps a month. I don't know about you, Steve. I don't know what your max is, but I doubt you could do 400 apps a month as your max. So that tells me that they're employing some sort of bot to help in that thing. Now, that could be right, it could be wrong, but one, does the consumer know? And number two, are they posing that bot as a human? And do we need to have that conversation? So that's one piece of the regulation. And then the other piece is defining where AI should fit based on our current regulation. So ResBug is asked for a gap letter analysis from a law firm. So we're waiting for that to come back to tell us, hey, where's where we think the gap in the legislation is today or not for AI. And then number two, we're going to be working on a tool for lenders that want to implement AI and give them some guidance around that. And then lastly, we've asked MISMO, which is the Mortgage Industry Standards Board, to start the process of defining AI standards. So if you think about the form that you fill out today to get a mortgage, the IRLA, that was designed by MISMO. We're asking for a very similar kind of strategy around AI. Like, give us if we're going to implement AI, what would that look like? And start that conversation. We're not advocating for it or against it, but I think today that my personal opinion of AI has evolved over the last 8 months. I would have told you, Steve, I think your job's in trouble and AI is coming for you 8 months ago, and we got to protect against it, to the point now where I think where AI will land is it'll make us all better and stronger and maybe give you those tools to serve more members efficiently. So if you think of maybe there's 70 or 80,000 LOs today, do you think 10% are the best, 10% are the worst, and then the middle are kind of, they're pretty good LOs, AI could make them all the best. If you think about that, it would give them the tools and at their ready disposal, if they engage, to be the best performing loan officer that a consumer could run into today. And I think if AI makes humans better, that's great. If it eliminates humans' jobs, then we've got problems. We got problems with compliance. We got problems with regulatory issues and misrepresenting to our members. There's a lot of emotion and empathy and just natural ability to communicate at a human level that goes into a mortgage application. And I don't think our consumers well served if we eliminate that.
Yeah. And I think ultimately, even if you utilize AI, there's a human that needs to check and make sure that, everything was done correctly, right? There's you just can't eliminate it completely from the...
Yeah, I mean, listen, we just talked about the pre-call about refis and pick the phone, take a nap, pick the phone, take a nap. Yeah, I mean, does AI serve a purpose? Sure. Consumer should be able to walk themselves through some of those really easy transactions. And then the human just manages the exceptions, like when the appraisal comes in low or they didn't put the right amount for income in, or, you kind of manage to those exceptions. I don't know if AI is going to manage a 570 credit score with a Michigan down payment assistance program and a city of Kentwood grant for 2000, no, those are really going to be, I think, the loose ends that LOs are still going to have to get involved in and understand and help, coach through all of the troubles that people have. I've been doing this a long time and not one loan looks the same. I learn something every single day in this business. To this day, I thought I would know everything. I don't. I mean, I hear scenarios today. I just heard today, we had a member walk in and said that they literally had a heart attack last week and think they're going to miss their payment this week. I mean, how does AI manage that? You have to sit down and talk to those members and understand how can we help you and through the next phase that you're going through. So every day I learn something new.
The more I learn, the less I know. And ain't that the truth, right? I mean,
it is.
In anything in life, but definitely in the mortgage industry. And I think that's important for people to understand, is that we always got to keep learning and keep growing. Because when you're not doing that, you're dying. So got to always be learning. Appreciate that. There's a lot of great things going on in our industry, Dan, and I appreciate what you're doing for it. But tell us a little bit about, what you do outside of the office. Tell us about the real Dan Sugg.
Well, one of those things are grandkids now, which is just shocking to me at some point. My daughter got married in 22, and I'm not, my two sons who are older weren't in serious relationships. One was in medical school and the other one was kind of working his career. And when they got married, I was like, oh, well, they both have good jobs. She's graduating with their masters and they're getting good jobs. And I think they'll probably work for a while and do some things. And I was not prepared for grandchildren. Now, my wife would tell you that she was prepared, but I think they got married in October and they told us in January they were expecting. And I was like, wait, what? I was like, I had to sit down. Yeah. I was like, but obviously I was ready for it, not mentally, but definitely emotionally. And so we have two grandkids who we just adore. In fact, one of them's at our house this week, spending the week with us and as a 3-year-old and running the show. But so grandkids, I love to golf. Spend a fair amount of time golfing with that. And then travel has been fun. My wife, her situation has kind of changed over the last year or so. And the amount of travel I do for work, I keep I don't know if you can even see it, but that's my travel calendar behind me there when I'm in and out work and personal. So I'm gone probably this year will probably be close to 100 days on the road. And so she's able to travel with me now, which has been a lot of fun and get us to go to different places. So love that. And then I'm pretty handy. I've been a licensed builder for, now almost 40 years. It was something I did in my previous life in manufacturing. I'd worked nights and weekends, remodeling basements and stuff, and for extra money when the kids were little. And that's been something that I took from my family. My grandfather was a licensed builder. My brother was a builder, and something that I, to this day, I enjoy doing, building decks for people. And, it's kind of my outlet. I love the completing a project kind of scenario. Yeah. So, it's amazing. I'll show you some stuff I do sometimes, but it is a lot of fun.
I'd love to see it.
It's a lot of fun and it's rubbed off. I'm now very proud of my kids. They're all, 34, 32 and 30 now. And, my daughter is teaching at Grand Valley. She's a tenured professor at Grand Valley teaching neuro in the physical therapy program, and then lives in East Grand Rapids. And then my son is an oncologist, down at, DMC or at Carmano's Cancer Clinic right now, finishing up his fellowship. And my oldest son's a chemist, working in auto sales lab stuff and all over the state. So I'm super proud of them. They're well on their way and spending time with family and definitely supporting them as much as I can.
If you're going to be on the road 100 days this year, are any of those days in Grand Rapids? And will you bring your hammer? Because I got a few projects for you. Yeah. I'll take a look at what you got going on, but I'd love to have you finish a few projects over here.
Yeah, it's funny. Whenever I go toward a kid's house, I just pack the toolboxes up. You never know what's going to happen. But my son-in-law is pretty handy too, so he does a pretty good job there. They live there in East Grand Rapids. So
nice. Well, it's been great having you on here. But one thing I always like to ask, everyone that comes on the podcast, to leave our listeners with something positive. There's a lot of stuff going on in this world, and there always will be. So if this podcast can do anything besides educating people about the mortgage industry and the great people in it, we'd like to spread a positive message. So Dan, can you leave us with something positive today?
Yeah, and I watched a few of these prepping for this, and you try to think of those really big things in life. But I will tell you that there is a small secret to success in life that I try to employ every day. And that's greet people where they're at, and greet them with a smile and a handshake and ask them, about themselves and try to understand their inner workings, because that continues to pay me dividends to this day. There aren't too many cities in this United States that I haven't made a connection, and I've been to every state. And if you think about the fabric of friendship and what that means and how far that gets you, I think that is super important. So look for the good in everyone. And then I said it earlier on the call, just give more than you take, in everything you do, whether it's holding the door for somebody or asking somebody if they need help. And don't assume that everybody's having a great day. Everybody in this life has struggles, and asking them, hey, how's it going? And how can I help? And then actually listen. That's been really cool. And more importantly, try not to fill every moment with talk. We have intuitions to try to fill that void, but have some awkward silence in your life, because that's when real conversations happen. So hopefully that helps. I love what I do. I do not consider this a job. I haven't since the day I clocked in and got paid $500 that I had to pay back. I thought, man, I cannot believe they pay me to do this job, to give money to people, to make them happy, and then show up like nothing was wrong. And this industry, quite honestly, I think is still a hidden gem. I can't wait to see, some of these people that we've hired and developed here, what their careers take them, because I think this is the best job.
Well, there it is. You heard it straight from the mouth of Dan Sugg, CMB, Chief Mortgage Lending Officer at Michigan First Credit Union. Dan, thanks for coming on and enlightening us today. It's been great. We appreciate all you've done and all you continue to do for the industry. And thank you to all the listeners for tuning in and listening to the MMLA Connect podcast. Thanks again,
Steve.
Dan.
I can say the same thing about you. Thanks for what you do every day, man. It's making a difference. And I appreciate this effort and certainly look forward to helping you in any way I can.
I appreciate that. It's been an honor, and I look forward to working right along next to you.
All right.
Appreciate you. Yeah.